Welcome back, and joining us now is Imtiaz Suliman from Vunani Senti Fund Managers with his take on today's market performance. Imtiaz, thanks so much for joining us this evening. So day 10 of that war playing out in the Middle East with no end in sight. Of course, we did see the oil price pushing past the $100 barrel per barrel mark, that is, but it has since eased. That, of course, fueling a lot of volatility in equity markets. But what I found interesting, what was playing out in the JSE, I thought we would be in the red, but it does seem like perhaps gold is back in favor when it comes to safe haven bets, which is quite different from what we saw last week with the dollar being the safe haven of choice. But just your take of what's been playing out in markets.
Yeah, hi, Tony. I think what we're seeing is that the JSE started off very weak and recovered throughout the day. We did have quite a large negative move last week. And, the all-share index was up 11% year to date, and now we're almost flat. So there's been a sharp pullback. And today we saw a bit of buying in the likes of the gold counters. But there were also some of the domestic names like the banks, which also did much better. So I think investors are trying to assess the impact of the higher oil price and whether, we are going to enter into a period of stagflation. So the oil price also did pull back throughout the day.
Yes.
And at one point, we were almost at $120 a barrel. And now we're much lower at $111 a barrel. So there's been a gradual sort of pullback in the oil price as the day has gone on, with some sort of talk around the G7 countries releasing some of their strategic reserves of oil to ease some of the pressure that we're seeing from the Strait of Hormuz.
Yeah, you know what's been quite interesting? The rhetoric we've been hearing around monetary policy moving forward. Of course, these high energy prices are fueling inflationary risks, and that then filtering through to monetary policy decisions moving forward. We have the Fed out with, the Fed's meeting next week, and then the SARB's meeting in about 2 weeks' time. What side of the table are you on? Last week, the rhetoric was around rate cut bets being pushed back. This week, I'm starting to hear, concerns around rate hikes.
Yeah, I think it's all going to come down to how long this period of heightened uncertainty is going to last, and whether that flow of oil through the Strait of Hormuz starts or not. So if you look at it, roughly 20% of oil flows through that strait. And if that doesn't come to market, we're going to see much higher prices for a sustained period. So if it's just a few days and, oil starts resuming and the flow of oil throughout the world also starts to normalize, then I think we shouldn't be too concerned around rate hikes. But if we do see a prolonged period of interruption, then certainly we're looking at a environment whereby we can see stagflation or a possible recessionary period.
Yeah.
So it all comes down to the length of this disruption and whether we can see a speedy resolution or not, because higher oil prices are going to feed into higher inflation. We're going to see growth also being impacted.
Yeah.
And the combination of those two is certainly not good for markets, but also for the economy.
I must say, when it seemed like we were getting, things together here in South Africa, here comes this big geopolitical risk that really could hamper, I guess, the trajectory of growth, and also just the trajectory that comes with monetary policy, especially with that inflation target at 3%. Expectations were for, of course, some rate cuts moving forward. But with this spanner being thrown in the works, yeah, that could be delayed for some time. Let's move over to what's playing out in company news, starting with AVI, right? The bottom line ticking higher, but pointing to the fallout in the Middle East when it comes to its outlook, which is not looking as rosy. Of course, then speaking to what we've just been talking about around the prospects of even more restrictive monetary policy. Just your thoughts around those numbers that were out, and you can even touch on the outlook.
Yeah, I think generally it was a good set of results. If you look at it from a revenue perspective, that grew around 5%, but earnings were up by 12%. And what AVI does very well is manage that price volume equation. And it certainly came through in this period. So there were certain divisions like the Entice, which tea forms part of, that did well. And if you look at the snack works as well, and within snack works, the biscuit division also did very well. So they put through new product into the market. They managed that volume in price equation very well, and that helped them from that perspective. Some of the divisions that didn't fare well was the personal care division, and I think we're seeing some pressure there from a consumer perspective, but also from a competitive environment perspective. And then if you look at I&J, which is the fishing division, that really did well with revenue growing by 9%. So there's a lot of different moving parts within AVI, and they manage it very well. So the outcome was a decent result.
Okay.
They do generate a lot of cash and do pay out dividends, and every now and then you get a special dividend out of AVI. So that combination does bode well for them. And again, this was in a tough economic environment. So I would expect them, to fare well, even if conditions do tighten from here on.
Okay, let's get your stock pick. We've got about 30 seconds.
Yeah. Okay. So I'm going with Shoprite. Shoprite is the market leader in the grocery business in South Africa. They did grow volumes in this period. The one headwind has been lower food inflation. And I think what we're seeing now is a bit of a weaker rand and a tightening of commodities. So inflation will start to pick up from here, which should benefit the likes of a Shoprite. They are still growing volumes, and they have this ecosystem with the online business growing well. They do very well from the volumes that they put through, and they're still opening up a lot of space whilst not sacrificing returns. So I think Shoprite is going to do well from here on the back of their own execution that they're doing, as well as a higher food inflationary environment.
Let's leave it there. Imtiaz, thank you so much for your time and taking us through trade this evening. That was Imtiaz Suliman from Vunani Senti Fund Managers.